Hello everyone. Have you taken home loan? And are you guys confused just like me whether to repay it early or not? Here are some facts which you should consider before repayment. With the increasing inflation domestically and globally, central banks across the world are increasing the rate of interest. When the rate of interest increases, there are two factors which get affected. Number one, interest on your deposit increases, which is benefit for us. But on the other hand, interest on borrowing also increases. In India, rate of interest on home loan has increased from 6.5% to 9.5% in a year. Due to increasing the rate of interest on borrowings, home loan borrower will have two options, either to increase their tenure or to increase their EMI. No doubt, interest on home loan is the cheapest out of all the loan, and in India, we get multiple tax benefits on the home loan, on interest component as well as principal component. That is why even if there is an excess saving, people tend to invest it somewhere else instead of repayment of home loan. However, here are some facts which you should consider before making such another investment. Fact number one, interest on fixed income securities are normally less than interest on home loan. So if you have made investment in fixed income based securities, you should immediately break it and you should repay the partial amount of loan. However, if that investment is made for your emergency, then you should never do that. Number two, due to tax benefit, many people do not repay the loan. However, interest component is eligible for deduction only up to 2 lakh rupees. That is, if your loan amount is 30 lakh at the rate 6.75% per annum, your interest is 2 lakh on which you save a tax of around 40 to 60,000 based upon your tax bracket. However, if the rate of interest increases just by 1%, your interest payment would be rupees 2,30,000 and on that excess 30,000, there will be no additional tax benefit. In that case, you can make a partial repayment to bring down your interest component within a range of rupees 2 lakh. Number 3. Deduction under 80C for principal repayment of loan is only 1,50,000. However, in many cases, in the initial year specifically, principal component repayment is very less. For example, on 30 lakh loan at the rate 6.75%, your principal payment will be somewhere around 55,000. So entire limit of 1,50,000 is not utilized. In such a case, in order to make deduction 1,50,000, either you can partially repay the principal amount, thereby making it 1,50,000, or you can invest some portion in PPF tuition fees and balance can be repaid from the home loan. What are the sources from which this loan should be repaid? Number one, if you have invested in low income earning securities, you should immediately break it and repay the loan. However, if it is your emergency fund, you should never do that. Number two, if you are getting bonus in case of salary, you should use that bonus to partially repay the amount. However, if you are confident that post-tax you can earn 12% from market, be it direct investment or mutual fund, then surplus should not be used in repayment of loan. Rather, you should invest in stock market. Thank you.